Had this conversation early this morning into any unregulated exchange. You don't even have to name names. They're just not going to do it anymore. And in fact, what we're doing in our operating company is we're taking, because fortunately we have other positions that we're not in at FTX. Here's what we're doing. I'm just one investor, but I'll tell you. We're taking our positions and we're moving them to Canada.
Holy hot dogs, the spectacular collapse of one of the world's largest crypto exchanges is being called bigger than Enron, potentially ruining the lives of millions of people.
We have multiple regulatory bodies. I personally, right now, am going through an SEC audit. The second one, it's a 5-month process where they go through everything. They do a phenomenal job, to be honest. And this is what needs to happen to crypto.
I think this actually started a few months back when the 3AC company collapsed. We've seen Celsius collapse, and now FTX is the biggest domino to fall. But I think the real problem is that they're keeping money on each other's exchanges, and everybody's promising each other 10%, 15% yields on holding stable coins. And I think they're playing a lot of really crazy games. And I actually think the worst of this news probably hasn't come out yet.
Calls for crypto regulation continue after the collapse.
While crypto being a noble goal, the uncertainty wrought by the recent news of industry bankruptcies and collapses has led some investors and commentators to wonder if the promised future of crypto is just a mirage. This mostly began with news early in November that FTX, one of the faces of cryptocurrency, has collapsed and filed for bankruptcy, costing investors billions of dollars. In this video, Kevin O'Leary shares his thoughts regarding the FTX crisis impacts on the crypto industry, as well as how all this could have been avoided. Yes, he stands strongly on the side of regulation. While times may feel uncertain, regulation will take shape, and strong businesses that can support consumers will persevere and continue to grow. Investors are also asking if the FTX implosion could have been prevented with tighter regulation. So, what kind of regulation could have prevented this from happening? Let's hear it from Kevin. But before jumping to the video, subscribe to my channel for more crypto-related videos.
By the time this is over, because of the nature of the chain itself, we'll know where that money went. We may not know the owner of the wallet, but we're going to find out where every single token went by the time this is over. And that's probably a good thing at the end of the day. But the questions you're asking are the right questions. And so going forward is, you have to ask yourself, what institution is going to put significant capital, because I've had this conversation early this morning, into any unregulated exchange. You don't even have to name names. They're just not going to do it anymore. And in fact, what we're doing in our operating company is we're taking, because fortunately we have other positions that we're not in at FTX. Here's what we're doing. I'm just one investor, but I'll tell you. We're taking our positions and we're moving them to Canada. We're putting them into WonderFi and BitBuy. Why? It is the world's first regulated license issued to a broker-dealer exchange, all tied in one, under the order from the OSC. There is no optionality for commingling accounts. That doesn't happen in Canada. And in a really strange way, what I'm saying here is, it's incredible that I have to go to another country outside of the US to finally find a place where I can put significant institutional assets that's regulated. Our regulation has fallen so far behind that I no longer feel comfortable putting significant amounts into anything that is not regulated under the OSC order.
The rapid collapse of crypto exchange giant FTX shows the importance for the sector to be regulated, something that Canada has helped lead the way on. Kevin explains how Canada has numerous safeguards in place that would help prevent some of the alleged practices that went on at FTX, including the use of client funds for company trading. I know, some see regulation as overreaching, but Kevin believes it plays a critical role in ensuring that these tragedies do not happen. So let's hear his thoughts on this Almanda situation, and if he believes it's the end of cryptocurrencies or not.
That's the Alameda situation. When you build a new blockchain, you basically want to get as many apps on it as you can. What gives value to Ethereum or gives value to Polygon is the fact that there are many, many apps being developed on it. Even Miston, which is brand new, coming out of the efforts of Evan Chung that's coming out of Facebook. He got funded immediately because of the potential of how many applications could come on it. But very often what will happen, and Alameda was being touted as this, you set up an institution that supports the development of a serum or supports the development of a polygon or supports Solana. And that was well accepted by many, many institutions, including all the institutions that you find on the roster at FTX. They understood that was what it was for. And indeed, if you look at what Alameda was investing in, was to support the ecosphere. So for many investors, that didn't seem untoward. And that may be questioned in the future. But more importantly, it would be the relationship between the accounts at FTX and Alameda. That's what's being alleged. That's where it's offside, and that's never going to be legal in any situation unless you sign a contract allowing it. And we're going to have to find out who signed what contracts as to whether that's legal. There's so much unknown in this situation, and as you pointed out wisely, that this is like an onion being unpeeled. But from my point of view, watching what investors do at the institutional level, this is going to help quite a bit in stabilizing what the rules are going to be, because crypto is not going away. And that is still of great interest to institutions that still won't invest in it because they don't have a platform to do it on. For me, it's moving under the Canadian order. I'm going to stay there until you can show me policy and regulation in the US. All of our assets will remain there because we've got a government, the government of Canada through the Ontario Securities Commission, controlling, watching, regulating every single account there. For all the, and frankly, what's going to happen is a lot of money, institutional money, is going to leave unregulated exchanges and try and find other places like BitBuy to put their capital. Because what else can we do? We need regulation.
The FTX issues show some clear flaws in the wider crypto sector. Kevin O'Leary believes more regulations will soon add structure to the Wild West vibe of crypto. FTX wasn't the first and won't be the last bad actor to be exposed. But Canada is in a better position than other jurisdictions. They've already laid the groundwork for a strong regulatory framework and budding crypto ecosystem, thanks to the collaboration between regulators and innovators. The US also needs to build on this success. Do you think regulation slows our pace of innovation? Will this crypto winter bring spotlight on the regulation? What could more regulation mean for the future of digital currencies? Let me know your thoughts in the comments below. And for more videos on Crypto World, be sure to hit that subscribe button. And also don't forget to like and share the video. I'll see you guys in my next one. Thanks for watching. Adios!